clearly things will happen and speed up quite quickly. It would appear early next year. Um, uh, but and I guess the last comment that I would make with that is, our economists at Bloomberg are looking at, yes, you're going to have a big impact. There's no doubt from tariffs being put in place, and it depends on how much retaliation goes back and forth. But a lot of this, in our estimation, leads to a rewiring as opposed to necessarily a catastrophic event. And in a rewiring, there's still trade flows, call it reglobalization as opposed to deglobalization. Is there an opportunity that stands out in any certain markets from more of a top-down perspective? We can come back to investing, but is there an opportunity from a top-down perspective that jumps out to you in any places in particular?
Um, I've been thinking about this. We're long-term investors and we're also students of history. Um, it seems to me that China is doing exactly what today with the United States, exactly what the British Empire did with them prior to 1842, which is the first Opium War. Well, wasn't the British Empire trying to open up the Chinese market? Weren't the Chinese Hongs of the Qing dynasty, no, sorry, Qing dynasty, the last dynasty, imperial dynasty of China, imposing a lot of tariffs and concentrating traders in 5 ports? And at some point, there were 13 factories, of which the United States had one, the British had another one, and then the Dutch had another one, and the Austrian. And what's happening now? Exactly the same. Somebody is imposing tariffs on China because they want to access the American market. The first event leading to the first Opium War in 1842 was definitely fueled by tariffs. This sort of imposition, let's say this block to trade, was definitely tantamount to raising the temperature of the water up until it reached a boiling temperature. So it doesn't seem to me that starting to become more nationalistic and raising tariffs, and this is not a political comment, is a very intelligent thing for global commerce or even the commerce of your own and the wealth really of your own country. It might actually annoy so many people and so many counterparties that then the result is going to be probably a redistribution of the alliances, geopolitical alliances, and definitely Trump is going in that direction. Now, this comment is not really political; it's historic. So, whenever we talk about tariffs and trying to castigate everybody with the sort of the I'm going to say imposition of a tax to visit the emperor of the Americas, it becomes a bit like trying to find the next country, whether it's emerging or westernized, that is going to benefit from the political whim of whomever is in power. The only safety that we have as investors is that Trump is going to last 4 years, which means it's probably not going to devastate everything that we have been working on from a long-term perspective. And there's also another consideration, I would say, that the average length of the people that Trump selects is much shorter than 4 years, which means that the implementation of whatever this man has in mind is probably far shorter in time and in effect, let's pray, than actually we anticipate. So let's go back to which emerging market should benefit. Carol said Vietnam. Sure, Vietnam feels thin though. It doesn't feel like a solid, incredibly developed infrastructure upon which great complex manufacturing can be established and can overtake whatever the Chinese have achieved in the past 40 years of intellectual, well, let's just say 30 years of intellectual kind of learning from the West. So yeah, Vietnam could be the substitution for a certain layer of manufacturing that can go undetected and untariffed into the Western world. But then again, where is the long-term solution to this? There is no long-term solution to this unless the largest domestic market in the world, which is China, and really I don't want to focus the discussion only on China, but really China is interesting because it has the largest consumer demand market in the world, only then, when the market internal to China will be self-sufficient and will start substituting the exports that the country actually depends on, only then will we see an adjustment from 9, if not 8, PE into the correct 15, if not 17.